Hey, if you're looking to start a wedding videography or photography business and you need a set of financial projections for a potential investor or lender, then you've come to the right place because we have built a financial projection template spreadsheet built specifically for photography and videography businesses that do weddings. Now, we include other services, other photography and videography services as well, but because you're doing weddings, there are some very unique forecasting, cash flow, and just financial modeling aspects to that with your customer deposits and how you take deposits well in advance that really make the process of creating projections for this type of business pretty complex. And we've tried to make this as simple as possible for you. And so I'm going to walk you through how to fill out this template and how to create a 5-year forecast for your business. But a little bit of background first. My name is Adam Huxema. I'm the co-founder of Projection Hub, and over the last decade, we've helped over 50,000 entrepreneurs create financial projections for all sorts of different industries and businesses. And really today, we're going to focus on this wedding-specific photography or videography business template, all right? So with that, let's go ahead and dive in to see how it works. Okay, so I'm starting at the At a Glance tab here. This is kind of the end of the process. You'll get to see lots of different charts and graphs, profit and loss at a glance, your annual sales, net profit. Get to see whether if you are in the wedding business, you're going to have very seasonal cash flows most likely. And so you get to see that in graph form. A use of startup funds graph and some tables. You'll also get a 5-year income statement summary, a 5-year cash flow summary, and a 5-year balance sheet summary. And then an income statement, cash flow, and balance sheet forecast for each of the 5 years broken down by month. So there's a lot of detail here. This is going to be helpful for you if you're trying to apply for a bank loan particularly, or just trying to forecast your cash flow out into future months. So with that, we'll go over to our Input Assumptions tab. And this is the beginning of the assumptions that we need to fill out in order to produce a set of forecasts for you. All right, so we've got our company name. We've got a start month of January 1st, 2023. We're saying we have a starting cash balance. So maybe you're already operating, you have a starting cash balance of $50,000. Maybe you initially invested $100,000, maybe between you and partners to get the business started. So you can enter that there. Maybe you have a studio that you're renting out and you did some leasehold improvements to that studio. And so if you paid for those leasehold improvements, you'd enter those in here in the fixed asset section. So we have, as an example, $60,000 in leasehold improvements, $15,000 in photography equipment purchased in month 1. And then you can see additional photography equipment of $15,000 purchased in month 13. So the idea here could be, maybe you start the business, you've just got one team, right? Maybe it's just you. But then out in future years, you might want to add a second team so that you can do, 2 weddings a day during the busy season, right? And so you could continue to add additional kind of sets of equipment for additional teams as you grow. Maybe you're also getting an SBA loan of $50,000 to help with the startup costs for your equipment and build out. All right, so now let's go to the Input Revenue tab. Now this is a bit of a beast, so hang with me. Hopefully this is going to make sense. And also I'll just mention now that we are available to help. So reach out to us with questions at support@projectionhub.com, and we'd be happy to help answer your questions. All right, so I'm gonna get into this. So at the top here, we have the ability to just kind of apply an increase in our prices for different services here on an annual basis. We're also gonna need to set up kind of the seasonality of the business, particularly for the wedding. So we've got the ability to add a peak season, spring and fall, and off season is what we're calling it. And then you wanna set your different months here and select whether they're off season, spring or fall, or peak season. The reason we need to set up these different seasons is because we have the ability to set different price points for different seasons. So for example, you're, a wedding video or a wedding photography package during peak season, you're probably going to charge a higher price than what you might charge during, January when things are really slow. So that's the reason we're having you set all this up and all these assumptions is so that you can set your prices here. And also there's, even within the peak season, there's also kind of peak days, right? So Friday might be one price point, Saturday might be more expensive than Friday and Sunday, and then a weekday wedding would, probably be maybe the cheapest option, right? Because it's really off peak. So the next thing we'll want to do is kind of build out our photography team. So again, if it's just you, then all you really need is team A. But if you're going to have multiple teams, so you can do multiple weddings at once, or you're going to add teams in the future. So you have the start month here. So we're saying, hey, we're going to add team C in month 18 as an example here. All right, so we've got team A, B, and C. We've got the ability to enter in contractor pay per wedding for those teams. So I've got $500 in here for contractor pay per wedding because maybe team A is you, right? And you're the main shooter, but maybe you hire a second shooter as a contractor to join your team. So maybe you have a lead photographer that's a salaried position perhaps, and then a second shooter that is a contractor, right? So that's what you could enter in here. Here, what you want to enter in is the rough estimate, so we call it rough estimate of the number of weddings per month that the team will be able to do. Or this is not necessarily your capacity. This is how many you think you'll actually do. Okay, so I'm thinking team A, maybe this is you as the owner. You think peak season you're going to do 8 weddings in the peak season, 4 in the spring and fall, and 3 in the off season on the average month. All right. Okay, so once we have all of those assumptions filled out, there's now the ability to see how many weddings we think we're going to do. You'll see the number of total teams available, and then you'll see the number of weddings. You can actually enter in the number of weddings that you expect to do, and you'll want to enter them in as a Friday wedding, a Saturday wedding, Sunday wedding, or a weekday wedding. And it's important to make sure you get those assumptions entered in there correctly because it makes a difference on the price, right? We're charging $3,200 up here for Saturday weddings, so you don't want to put you just want to make sure you get those in the right buckets, right? So this is for the month of January 2023. We think we're going to do 2 Saturday weddings and 1 Sunday wedding. All right, and so now the next bit of complexity is we want to try to say, okay, which team is shooting those weddings? And so you'll want to look through here and just make sure that if you have 3 total weddings, you need to have 3 total wedding team assignments at least, right? Now we have the concept that maybe some weddings are going to require 2 teams. Maybe that's a package that you offer or something where you're actually going to have 2 teams there. And so just as an example, in this month, we have 7 team wedding assignments, but we only have 5 weddings. So it's okay to actually have more wedding assignments than you have weddings here listed. Probably the way you're going to want to fill this out is that you just make sure that the total number of weddings, there's 3 total weddings, you've got 3 total wedding team assignments. But I just wanted you to be aware to look at these 2 numbers, make sure that at least you have assignments for at least the number of weddings you have forecasted here. Because that's going to, based on those assignments, that is going to determine your total wedding contractor compensation. All right, we're getting close to finishing up the assumptions for weddings here. We've got now cash flow considerations. So typically you're probably going to take a deposit sometime in advance, probably many months in advance. So we're saying on average, we're going to take a deposit for a wedding 9 months in advance, and we're going to collect a 40% deposit. And then if you have any deposits as of the date that you're starting these projections, you can enter that here. So this is kind of like your current deposits before you even started the projections. And then months to book year 1, this is just how long do we expect it to take to kind of book your first year of your forecast. And we're saying that you're going to be fully booked for the year by month 3. Okay, so all of that is going to allow us to calculate our revenue and what the cash that's actually collected. And that's what makes this complex for photographers and videographers, is that you might be really busy with work in the summer. You might generate the most cash in the fall and the winter when people are paying you deposits for those weddings in the future. So the work and the cash flow don't necessarily align, and that's why it's actually helpful to go through this exercise and try to model out what you think is going to happen and make sure the business cash flows, right? All right, so that's everything for weddings. Now, we have the ability to add in additional photography or videography services. So you can do things like senior portraits, family portraits. Basically, you can set up the service type, the type of service you're providing, the number of that service that you expect to provide each month. So we're saying, hey, in month 6 in June, we're going to do 10 senior portrait services. And then down here, you'll be able to select your different or create your different packages. So let's say for a senior portrait, we've got a basic and a deluxe senior portrait. We select the service type here as a senior portrait. And then the thing I want to point out here is that you need to select what percentage of your services of the basic senior portrait, what percentage does this line item represent of that total service type. So we've got 2 senior portrait services, and we're saying that 50% of people that buy senior portraits will get the basic, 50% will get the deluxe. For those that buy family portraits, 10% will get newborn portrait offering, 90% will get the family photos. Now for our engagement service, let's say we only have 1 offering, so all 100% of people that buy this engagement photo offering are getting this particular offering, right? We're not splitting it between different service types. And then the same thing with corporate. So hopefully that makes some sense. Again, feel free to reach out if you have questions. And okay, so we have cash flow considerations that we built in with these other services as well. You may have already accepted deposits for some of these other services. And you can set here for each service type what percentage of deposit you're going to require and how many months in advance you're typically going to get that deposit. So for senior portraits, maybe that's really popular and we book out way in advance, so 6 months in advance, we're fully booked, and we collect a 50% deposit. So that's what that's saying. All right, the last bit of revenue here is product sales. So once we have all these services, we can say, okay, how many orders per wedding will people order products? So what we're saying here is that for the average wedding, there's going to be 3 product orders. And in the average product order, there's going to be 0.8 photo books, 0.5 framed portraits, and 25 prints in the average wedding order for our products. We can set the different revenue per unit and cost of goods sold for each of those products. So for example, what we mean by saying 0.5 with the framed portrait, that would mean that essentially half of the people that place an order for products for a wedding or for senior portraits or family portraits for any of your services, 0.5 are going to get a framed portrait. All right, so that's what you want to be thinking about here. All right, I told you there's a lot here. I think we have gone through the key aspects of the revenue model here. So it gets much easier from here. On the input other expenses tab, we just have your different operating expenses that you might have. These are just examples. You'll need to do your own research on what you expect for your actual scenario, your situation. But you can enter in your expenses as a fixed dollar amount or a percentage of total revenue or percentage of wedding revenue or product sale revenue. So an example here of entering in an expense as a percentage of revenue could be a transaction fee. So let's say most of the time you charge customers with credit card. If that's the case, credit card processing fee of 2 to 3%. And so for a 2% fee, we would enter that in as 0.02 and select total revenue from the dropdown, and the model is going to automatically calculate and add a 2% transaction or credit card fee percentage expense. Now onto our salaries tab. We can enter in our different photographers or videographers that are employees and enter in those as salaried positions. You can select what month those employees are going to start and the number of those employees that you have. And then if you have other employees, assistants or receptionists, office manager, business manager, that sort of thing, you can enter in those assumptions here as well in start month and so on. All right, that brings us all the way back to our profit and loss at a glance and kind of the final deliverable here. You'll see a lot of data here that you'll be able to look at. You'll be able to see here whether you're profitable, And you'll see here in 2025, we actually dipped to a net loss. That's because we brought on extra employees in that time frame. And so that extra expense brought us down to a net loss in this example, right? Okay, as a thank you for sticking around to the very end of this, we're going to offer a discount code. So we have put a link to this template in the description of the video below, and also a link to our coupon code form. So you fill out the form, and then we're going to email you a coupon code where you can get a discount during checkout when you buy this template. And again, if you have any questions at all, please reach out to us and we'll do our best to help. Reach out at support@projectionhub.com. And best of luck as you get to work on this. All right, thanks.